If you feel like you've been running in place with your finances and crypto in the last 6 months, look, you are not lazy. You are just falling into 1 out of 3 very specific traps. And I know how frustrating it can be scrolling your phone on Twitter, Instagram, YouTube, Google all day just to feel more confused than when you actually started. So for that reason, I'm going to hand you over the exact 2026 cycle map that I check a couple of times a year, not too much, so you never feel lost again. My name is Arno Vanmassenhove, and in the last couple of years, I got scammed for over $65,000, which is what forced me to finally master this space. By 25, I made over $1.5 million to my name. Right after that, coached over 200 plus people, and I'm actually pretty proud to announce that I'm also the bestseller author of the book on Amazon called Unchained. Now let's dive into the first thing of today, which is known as the macro. Now, the macro in one word is exactly why cash is risky, because every single year, the government and the banks are printing more money. For that reason, the so-called Feds have 2 main tools out there, which is one known as a rate hike. There's been a lot of talks about it, which is making borrowing more expensive, as well as a rate cut, which is obviously what we like in crypto. This is making the borrowing of dollars actually cheaper, which means for traditional people, that means your traditional dollars are losing value with the day. Whereas on the other hand side, collectibles, whether that's a fine wine, a sports car, a watch, or crypto, actually love it. So just to know if money is getting tighter or cheaper, we actually got 5 tools out there that allow us to understand the macro. The first one is known as the ISM business cycle. If it's below 50, that means the economy is currently contracted. We've seen that for a while in August, September, October, November, December, and so on. But right now, we can see how we have the 7th mark above 50, which actually shows us that we've been in a expanded economy for a while. Now, the best part is that due to this reason, factories and manufacturing are actually getting better, making room for new hiring, making room for more payroll, making room for all this money to cycle back into the economy. The second one is known as the Russell 2000, which is showing us how small cap stocks are doing. You can actually see how this chart starts to go up more and more and more. So as these small cap stocks are actually showing more performance, we can actually see that with a delay flowing into actual small cap altcoins. The third one is known as the US M2 dollar supply. This is showing us how many dollars are going around in an economy inclusive of savings. And what you can see is that oftentimes, not always, the US M2 dollar supply, seen as the pink line, is moving in close lockstep correlation with Bitcoin, or the other way around. Bitcoin just favors the M2. So that usually shows us exactly where things are going to. Not always, but usually when we see an expansion of the M2 dollar supply, that's when we can see Bitcoin being in a reactive spot. Again, there's way more than that. Bitcoin has a 4-year cycle. Usually there's a window to that. Usually Bitcoin starts to go down through August, September, October in a midterm election year. We'll cover that in a minute. You can see it over here. This is why there's kind of like an offset. So again, this does not guarantee price movement. It's just a better understanding of where Bitcoin could potentially move to. The fourth tool is known as the CME FedWatch. Before certain decisions on a federal level in the US are happening, we can actually see this countdown that shows us how long it's going to take until the next FOMC meeting happens. And we can even see the probabilities in regards to the target rates, which then affect how the economy is moving. Just being aware of this data and being able to read it prior to these events happening is one massive plus to understand things before they actually happen. But then the fifth one, and my actual personal favorite out of all 5, is actually the bill buybacks from the Treasury, from the Feds, essentially. What we can see over here is an actual buyback schedule. So right now we're the 13th of August, and we can see how over here, there's kind of like this schedule that says, okay, on the 11th of August, there's an operation, then that's going to settle. Well, that settled yesterday, was about 5.1 billion. So what happens here is when there's this massive discussion of there's going to be rate hikes, which are making borrowing more expensive along the lines, opposite of the rate cuts, then people inside of crypto think, okay, that's bad news for crypto, which usually it is. But most people don't understand that there's a buyback schedule, which is kind of close to quantitative easing in disguise, which means it's actually kind of like a silent rate cut. It's not the exact same thing, but all in all, it's great to understand there's a schedule in the back of this all that shows us that there's more than just the public announcements out there. So by this point of the video, you should now understand whether cash is getting cheaper or tighter without a finance degree required and an actual clear signal that now and then, not every single day, you can use to understand exactly where we are. So that brings us to the second part of this video, which is obviously the cycle. Now, this next part is exactly where most people quit, but this is actually the part that matters the most. Now, if you mark every single halving on the Bitcoin chart every 4 years, you see the same pattern over and over again. There's 1 year of a fall phase, followed by 2 to 3 years of a climb phase. And this in and out itself matters more than any price move out there. Because Bitcoin during those halving events is essentially cutting the rewards of every single miner out there, people that have a computer to solve mathematical equations, making more Bitcoin out there, they get half of that reward. So as a quick exercise, what I want you to do is I want you to take the Bitcoin chart and look up all the halving dates, past ones, the upcoming one in 2028, mark that on the chart, and then take a look at the range of 12 to 18 months away on the left-hand side of that halving. This before that, not within that, is usually the best moment to accumulate assets prior to the markets taking off. And then 12 to 18 months after that is usually the best window to gradually start exiting your positions. There's no rush. There's 2 to 3 years of a bull cycle, but nonetheless, planning your exits is one of the best things you could do. The second one is known as the 200-week moving average. In simple words, the average price people paid to get Bitcoin in the last 4 years. And now we see a massive overlap of the current price on top of that line. The closer we get to that line means it's like when you'd go to a toy store with your kids and you'd like to get a PlayStation at a discount, whatever. The closer we get to that white line is the closer we get to a fair price for that PlayStation, to the actual representation of the average purchasing price. Right now, we're sitting on that thing, and alongside of this indicator over here, it's kind of getting squeezed into this triangle where eventually it will have to make a decision, whether it goes up or down. My overall thought on this, my thesis, not my guarantee, not my expectation, is that it's going to continue to go down until we move into September to October. The calendar matters a lot as well. Just being able to count the actual months from the last peak up until where you're at right now tells you if you're in the beginning, the middle, or the end of a cycle. So if you want to navigate yourself within a certain cycle, just count back from the last peak all the way to where we're at in time right now, just to get a better understanding. The fourth one is known as midterm year seasonality. Bitcoin usually has not been green during those moments. The majority of the times, August during a midterm year was actually red. So just so you know, these years have usually been the weaker part of the 4-year cycles that we've seen. Number 5 is known as the market value to realized value for Bitcoin. It's a simple value meter for Bitcoin that is comparing the current price versus what most people paid for Bitcoin. So if we were to take a look at it right now, we can see how the Z-score is sitting here over at a lower level. And as we go back in time, you can see how there's potential for it to go lower within that green zone. So here's the thing. Yes, getting close to a 200-week moving average makes sense for a point of like dollar cost averaging your way in. A lot of people are buying it daily, bit by bit. Not the most optimal way, but as you can see, if history repeats itself within that 4-year cycle, there should be some more downside where Bitcoin could become a little bit cheaper. And the last one, number 6, is a side note on Ethereum, because Ethereum and Bitcoin move in close lockstep. Their correlation is roughly 0.91 at this point of the recording of the video, which means they're closely correlated, but not fully correlated. It's not like they're scoring 1 or whatever. There's a different speed and magnitude to the way Ethereum is chasing the price of Bitcoin. So it's not always going to be the same. Usually it's a bit slower. Usually it's a bit falling behind. But the point is, Ethereum is right now in that same cooling phase that we see with Bitcoin, potentially heading down a little bit lower prior to seeing new highs and the start of a new cycle. By now, you should know that the 200-week moving average is kind of like your speedometer, and time in the market matters way much more than timing the market. This brings us to the third one, known as portfolio. Every cycle goes paired with 80% of the markets going sideways. This is why people get bored, leave the market, don't know what they're doing. See, there's 2 types of people, 2 types of investors, which is 1, the holder. This is somebody that heavily relies on the price of an asset. They buy Ripple prior to a lawsuit, then they wonder why it's tanking down, and then they hope it's gonna recover eventually. Ripple is super centralized. I'm a bit biased. Just take notes on it. Then the other one is the fee builder. So the fee builder is somebody that doesn't rely on price too much, that relies on transactional volume. This person doesn't care whether a price is going down or up because in both directions, they're making money. If there's a war news or tension, well, then people get afraid. That means sell orders kick in. That means that position is generating fees. If people get euphoric about a certain event taken by the Feds or whatever, means the markets go up. Transactions happen. In both directions, you can make money, whereas with the first one, it's kind of like a gamble of 50-50. So after having coached over 200 plus people, for that reason, I see three types of people. The first type of people that I see is the euphoric investor. No matter what they want to do, if it gets boring and mechanical, even though it's profitable, they run and chase the next pump. They let go of money and wealth flow that could keep flowing for years just because they want to have a win today and maybe eventually a loss tomorrow. The second one is the DIY Googler. This is the person that is always Googling it up, right? The Reddit pages, I've seen this on Twitter, I've seen that. They never know where the cycle is at. They never get to master this space from a perspective of knowing what they need to know. And for that reason, they try, they fail, and they label it all as a scam. The last one is the instant gratification seeker. This is somebody that struggles with motivation, doesn't really master discipline, and gets to a point where they want to take action today and get rewarded tomorrow. Let me know in the comments who you think you are. There's no shame in admitting it. I'm always open to it. I've been the DIY Google. I've been all of them. And eventually I figured out that losing $65,000 was enough for me to understand that it was time to get serious. So if you've been burned before, it's completely okay to watch this video and be skeptical. I've been burned myself before as well. So the question you need to ask is, are you the person just holding on to assets waiting for ages, or are you the person that wants to start generating fees? Because even Frank at the age of 65 was able to do it. This guy joined us, pretty cool guy with no common sense on what is a laptop. Like, how does a laptop work? How do I boot it? How do I, whatever. He was completely lost with that. And we had a burning desire and passion, which we still have, to show him exactly how it's all done, give him the tangible steps, the action items, everything. So he was able to go from a point where he knew what he wanted, which was more time with his grandchildren, to being able to do that. In the image, you can see how he's sitting it out, listening to the latest group meetings, cooking, and of course, waiting for his pool water to clear up as he's generating fees next to his grandchildren. And then the last student here who shows massive gratitude towards my coaching team, telling me I'm lucky to have them. And again, that's completely true. The coaches that I'm working with right now are two people, great couple that I work with from the Netherlands originally, that were scammed for over $300,000 by a foreign exchange. I warned you for it. I'll keep warning you for it. These people were lost. This is a lot of family money that was gone in the mist, reached out to me, wanted to get to a point of solution, helped them, did a 15x return on investment with full proof on video, got to a point where I told them, hey, you know what? Your ambition is infectious. Why not be the coaches? That's how we ended up teaming up, and people can sense that. So by now, you should know that sideways markets are actually a pretty normal thing in crypto, but being able to build fees in this market will actually change what sideways means for you. Which brings us to number 4, known as the engine. 80% of the markets are going sideways, and that means there's actual breeding ground to build positions that generates from the movements these markets are actually seeing. It's called the digital ATM model. Now imagine you're in a busy airport and there's like this currency exchange booth that has been operational for a day, but there's only like $100 bill inside of that cash register. What happens is the queue gets long, a bunch of frustrated people start to get angry at the guy at the cash register because they simply cannot go from one currency to another. And similar to that, crypto actually needs money inside of their cash register in the back end of assets like Bitcoin, Ethereum, and all that stuff. In fact, Coinbase and Binance and all these exchanges out there need people like us to take on this position, which is exactly why we get rewarded, even if the price is not deciding to do that. The best part of this all is that, of course, all of this happens with full self-custody. You're one click away from getting the assets that you're generating in terms of fees to the back of your phone on Apple Pay, and there's no withdrawal locks, no shady websites, no nothing. This is a 2 to 3 hour a week habit, not the next side hustle like Amazon, faceless team pages, YouTube channels, AI agents. All of them are lucrative, but essentially they never fix what happens to your money the minute it lands on your bank account. So congratulations, because now you made it from being completely clueless to actually getting common sense on where we are in the cycle, so you never lose your way again. And even better, I made you a free cycle navigation model tool, which you're going to find below this video as you join the free community. Disclaimer, this community only has a limited amount of people that I'm letting in, so make sure to go down below and join it in the next 24 to 48 hours. Now and then, me and my team let people in, but we're pretty limited in that because we want to keep it as valuable as we possibly can. And by the way, if you want to get my hands on my full 2027 bull run plan, it should be on top of the video right now as well. Click on it, you can see that video right now. And that's how you go from always feeling lost to finally getting your own compass so you can stop guessing and start knowing exactly where you stand.